Epstein, and here we are in your Father's Day weekend. Happy Father's Day, all. And this is Friday, the 16th of June, 2023. Now remember, we have Juneteenth. That's the new holiday, as it's called. It's Monday. Not everything is closed. We get some economic reports out. The financial markets and the stock markets are closed, but not the futures and everything. So they will open in some markets on Sunday. They will finish the day off early, 11, 12 o'clock, then reopen for normal hours in most markets in the evening at 5 o'clock p.m. on Monday. So just be ready. My clients have all been sent the updated hours and the way they go. So this was the melt-up mania buying week. You know that. I know that. The market knows it. It's been nonstop now for about 2 weeks, where the market started with the artificial intelligence. It got a boost with Tesla and Ford jumping on board, and then everything just kept going. Even Apple comes out with a new piece of headgear, and let's face it, who's going to be buying headgear at those prices? It's very, very high. And that's the interesting thing. People, get married in some of these things, and you go, what does Apple have to do with artificial intelligence? Their integration of platforms is phenomenal, but artificial intelligence, I don't see them with that. Doesn't matter. A rising tide lifts everything, and that's the way you look at it. So let's go look at the charts, and what we're going to look at this time are the weekly charts. Now, when I start you off on the weeklies, I'll inevitably start with a monthly, just a bigger look of the market. The S&P is over the 18-month moving average. That means the bias is bullish for the market. Then I go to the area chart of closes on a weekly basis. You have been over this since March. So the bias of this market, my definition of bias is when you're over some number or under it. Upside bias, you're over the 18-week average. Downside, you'd be under it. Got it? That filter is in place. So you've had the bullish filters in place. You then take a look at the action. Now, this market tracked sideways for quite a while, and then, as I said, began the launch, and now you're in the melt-up. Melt-ups occur when markets almost become irrational. It's just buy everything. It's the panic. If I don't get involved now, I'm going to miss it. I won't be able to get involved. And that's what you've got. There is a pattern that is bullish. It is higher lows, higher highs. The market does not have a bullish setup on moving averages. What do I mean by that? In a true bull market, the shortest term average is over the medium term. In this case, the 18 in red would be over the 100 and the 100 over the 200. You don't have that. The market's just melting up. Where might the resistance be? Because you don't have any resistance in terms of a moving average over the market. Well, you go to the Bollinger Band, and that's right here. And if you and I just step back on this Bollinger Band, just like this, if you go to and you look at it, on this week, which was June 9th, just so you know, the Bollinger Band was at 43.39 and a quarter, and you had not hit it. This week, now come up here now, this week, you come up and you finally hit it. So for the first time, the market has hit the Bollinger Band, and it is over it. You only stay over it 5% of the time. I want you to throw away everything you think in the market. It screws me up when I do it. It'll screw you up. As a chartist, throw the name off the chart. That's the hardest thing I know you're going to tell me to do, but it's the thing that makes all the sense in the world. And the reason is throw your emotion out. When you think you have it understood and you're trying to chart, why are you doing that? If you think you have it understood, go with what your understanding is. As a chartist, you have to have rules. My rule, that's all it is you're never a buyer over the upper Bollinger Band because it only stays over it 5% of the time. You're never a seller under it because of the same thing. That doesn't mean if you want to be short, you can't sell rallies back in the market. But you're using that to cover, and when you break the patterns, out you go. In this case, I teach that the first time you hit a Bollinger Band, especially after you haven't hit it for a while, and you haven't hit this since way back here, beginning of the year, that is the spot. Professional money, you don't see it, but that's where they're taking money off the table. I hear if I'm watching Bloomberg, CNBC, people doing rotations in their portfolios as they're going, it's a little frothy. Well, of course it's a little frothy. And if you understand what's carried these markets, it's 7 to 10 stocks that have carried these indices all the way up. It's powerful, no question about it, but you got to keep your wits about you. So I'm not telling clients to chase that. Never would. Is it embedded? It is. So there is a way to come in on the embedded, but I promise you, it is under the Bollinger Band. It's in this area. Take my enhanced Bollinger Band course and you will understand. There are rules to it. Do you buy if you first make a higher high and then you break back? Do you buy it if it just breaks down and gets back under the Bollinger Band? These are the things I teach. This market is bullish until the red line closes under 79 and deep breaks in the market, I think will continue to be bought. When I look at the Dow Jones, this is no S&P. This is number one, not in a melt-up. Number two, it's not a market leader. This is a market that's coming up to the resistance right here in a very well-defined channel. You see that. The market has not hit a Bollinger Band one way or the other since March. So it's time. It can easily get up there. Would I advocate at the upper Bollinger Band to be a buyer? Never. Are we trending? Not really. Lower low, higher high. NASDAQ, another leader. Stellar. Stronger than everything. Why? Notice how it hit the Bollinger Band and just kept riding it. That's called that gorilla glue trade. So this is when the market grabs hold of that and it just stays on it and pushes. It's irrational at times. You don't get a low that takes out a previous week's low. You have to go all the way back here to the beginning of May in order to see that. And it was the embedded reading that set this up. I did my analysis today in the Spider ETF, and I really, for the weekend subscribers, I really show them and bring them on board with this. I'm going to do it in the futures after I do these. It'll probably be Saturday or Sunday. Remember, if you want to look at those videos, if you're watching me on YouTube, there's a blue button here. If you're in the futures, you go to our website at iraepstein.com. If you're not a member with us, then go to the Research Center, and you will see where I've got the Spider ETF video area in the research, okay? iraepstein.com. And you could see where you're at on this. Okay, I do think, like in the S&P, on a good break, this market should be bought. I will stay that way until the red line is under 79, and then I'll call it a day. Would I tell a client to buy over a Bollinger Band? Never. Then we come to the Russell, and it is like the Dow. This is not the leader. This has been pulled with everything. It's a rotation. As you've gotten away in those 7 to 10 stocks and they've carried the market up, people are peeling off money and they're going, where can I find the low PE? I do think the economy is going to get better. Well, that's where the first mistake is. Why are you thinking the economy is going to get better when everybody's saying the economy is going to slow down? This is the mania part that pulls the market. So as it comes up, overbought, I can make an argument it can get up there. Why not? But I think it'll fail up at that area and go nowhere. Is it a buy? Nothing on this work says to be a buyer. We then go to the 30-year bonds, and I think you'd agree. The market is in a downtrend here, lower highs, but very subtly, it's countered by the fact that suddenly you have higher lows, lower highs, sort of gotten quiet. It reinstates its full bearishness if it gets under 125.24. It gets bullish if the market gets over 129.16 and closes over the 18-week average, which is currently 128.26. You're in a very interesting position here in the market. Momentum down, bias down, the legacy of the swing line's down, but that's not what it's doing now. It's going into something of a pause. In the 10-year note, it's different. It's bearish, but it's also oversold. Any reading in the slow stochastic under 30, where the numbers aren't going sideways under 20, is oversold, and that's what you've got. So if the pros are selling, what they don't want to see is you get over this week's high. If you do, the 18-day average is the likely next target. But you're so oversold, if you get short here, where are you going with the market? You think you're going to go to the lower Bollinger Band and oversold. Not an interesting trade. In the dollar has been trendless. You heard what I said, no trend, trendless for a very long time. When it crossed this high all the way back in March, you broke the pattern of lower highs, lower lows. You went into a pattern of a higher high, a lower low, and you've been doing that. You've been drifting in the sideways action here, and you are right now. The weekly chart has no bias up or down. Well, it has an upside bias or downside. It has downside bias since it's under the 18-week average, but it's not trending. That's important to understand. The euro is the flip-flop of it. On the weekly chart, you have a higher high and a lower low. Momentum had been down. It sort of neutralized itself. The market did get back over both moving average. They're not lined up for a trend trade. The market's over the 18-week, but the 18, to get really nice and bullish, has to get back over 108.68. It's only 36 points away. That can be done in 1 week. That would be bullish. But the pattern has to do something, and we don't have that yet. The Canadian dollar has a lower low, higher high in sideways action. This is not the spot to buy, as it was not the spot to sell on the first challenge of the Bollinger Band. You only stay under or over 5% of the time. The combination of being oversold at a Bollinger Band, not the place to be, spot to lift shorts. The spot when you're overbought at a Bollinger Band, not the place to start getting bullish. I know you'll tell me it's going up there. It doesn't matter. Throw the name off the chart. Sit back and just look at it and go, what would I do? That's what you have to do to trade these markets. You can't keep the name on them and let in your mind, oh, the Bank of Canada just did this and blah, blah. That gets me screwed up, gets you screwed up. You're either charting or you're doing fundamental analysis. You can talk the fundamentals, but honestly, this was a week where I feel that my brain got washed right. It happened today, by the way. I'm sitting there going, God, I hate waking up and looking at these charts. You're in melt-ups, there's nothing. And at dawn, the light goes on, I swear to you. It takes sometimes a couple of weeks. And I went, wait, this is not hard. Throw the name off the chart. What would I be doing? And I got very aggressive on the weekly recommendations today in my Spider ETF. Now, I haven't done the futures yet. I'll do it probably Saturday. In the Japanese yen, are we going to embed? So let's count this. To embed, you need 3 weeks in a row that are under 20 on the slow stochastics. Is it going to let me do it? No, it's not going to. I'm sorry. I don't know why. But 1, 2, I think we're there. So on hard rallies, not even hard, if you're taking the course, you learn where they're at, I think the market will continue to sell. Now you're going to hear, as sure as I'm talking to you, with the Bank of Japan today holding the rate steady and the market dropping some 70 or 80 points, you'll hear they're going to intervene, and they might. The pros will use that intervention to cause the market to rally initially. Everybody will get scared. The pros won't. They'll sell into the intervention. If the policy stays the same, a bank can intervene, drive a market temporarily, and do things to it, and then it comes back to punish. The greatest example has been Turkey. They keep playing with their lira under the crazy program that Erdogan has of his, how do you beat interest rates, inflation? It's by lowering rates. Doesn't make sense. But the brand new banker that they brought in, he probably this week is going to raise interest rates for the first time. Hope he doesn't get fired. When we take a look at Bitcoin, on the daily charts, Bitcoin has come down hard. On the weekly, not as hard. And on the weekly, I don't know. I don't see a trend trade here. I see a higher high, lower low. I certainly see downside bias. I don't see a collapsing market. Then we get over to Brent, WTI, the difference in the spread. You're back to the neutral zone. You had been down here into the $2.50 zone. Now you're sitting here at 483, right where the 18-day average is. Okay, it's from here the market will tell us where the bias of the difference is. What is the chart doing? The chart still has bearish bias. The market is under the 18-week average. It is not in a trend. On the weekly, you have a higher high and a lower low. Momentum is flat. I get bullish if the market closes over 79.15 in the Brent. Hasn't done it yet. If it does, I get bullish potential target all the way up here. When I come to WTI, it's the same pattern. Number one, I can't get a bear pattern out of this. I'm not embedded, and I have a higher high and lower low. But if you don't take out 2 weeks ago's low, and you do get over the 18-day average and the 75.06 level and close over the 18, I could get a bullish signal. So I have a game plan. In gasoline, I like gasoline. I think gasoline is looking better and better. The trend is up. I think the market is a buy. I don't want to see the market underneath this week's low. I am not saying that's low risk. That's a 12-cent risk. It's been a broad week in the market. The first target, if you buy it down there, certainly going to be in this 270 area. And the bigger target's the upper Bollinger Band if you can get there for the July 4th holiday. Remember, most of the premium of July 4th is now getting into the market. People will travel now, and it's the summer season, so don't get me wrong. Summer season is generally a lifting of gasoline prices, not a decline in them. So you put this together, you come up with a game plan, and you try to work with it. But I'm throwing an awful lot of jargon at you. Do you understand the jargon I'm throwing? If you don't, we have 2 volumes that we put together with our good friends from Futures Magazine explaining different types of charts. The patterns, and these are all great. They're in full color, examples galore, how to work with different types of moving averages. I use a slow stochastic. People use MACD, RSI. What do spreads tell you? Today, in one of my updates, was showing in the hog market, take that back, Fibonacci. I saw Elliott Wave there, it was in my brain. And I'm always talking money management. Is it a slow stochastic trade? Is it a regular trade? There is a huge difference in the risk you take on both. So as you look at the markets here, this is where you're at. You take a look at IraEpstein.com, free offers, it's there. Move your cursor up here, you'll be right to it. You'll see an icon appear, give it a click. I'm Ira, you have a great Father's Day. We will be putting out minor updates on Sunday night, I'm pretty sure on that. I don't know that I'll do anything Monday though, so don't look for any videos from me on Monday. I'll resume on Tuesday after this video. You take care.